Before we start this week's podcast, I'd like to say a quick thank you to our podcast sponsor, PensionBee. Now, PensionBee is one of the UK's leading online pension providers that helps consumers combine, contribute and withdraw from their pensions, all through the PensionBee web and mobile app. Now, you can sign up with the names of your old employers or providers in just 5 minutes, and PensionBee will help you find, transfer and combine your old forgotten about pension pots into a low-cost online pension plan. Now, these are managed by the likes of BlackRock, State Street Global Advisors, Legal & General or HSBC. Now, they have over 250,000 customers that have already signed up to combine their pensions with PensionBee, combining close to £1 billion into their plans. You can also find out more information about PensionBee at pensionbee.com, and as always with investments, your capital is at risk.
Hello and welcome to episode 257 of the Money to the Masses podcast with your resident expert as always, Damien Fay, and me, Andy Leeds. How you doing, Damien?
I'm good. It's a special show this week. We are doing something slightly different. We're going to give you a week off the money stuff in a way, but this week was a big week for Money to the Masses because it was our 10th anniversary of being in existence. So we've been around for a decade, which is a huge achievement. It feels like it is a long time. But what we're going to do is this podcast is going to be almost dedicated to that decade, and we're going to tell a little bit about the story of Money to the Masses and how things have changed over time, what went well, what didn't, because you don't often get a chance to look back. We concentrate so much on what we're doing at Money to the Masses that the decade anniversary kind of crept up on us, didn't it?
Yeah.
And this week I actually went back to a particular place, a coffee shop in particular, that's relevant in our history. And it was good to go down memory lane and just remember the early days of Money to the Masses. So what we want to do is we're going to tell you the story of how it came to be, the sort of journey that I've been on with this. And just for a lot of people who've listened to the podcast over the years, who joined partway through the journey, then I thought this would be a good episode just to get all of that out there so people know the full story of Money to the Masses.
And also I think we're going to cover things like lessons you've learned, perhaps mistakes, things like that. Just so it's not just about Money to the Masses. People could apply what you've learned to maybe their own sort of pursuits.
Yeah, and what they may want to develop, business ideas or anything like that, because there's a big personal journey for me in Money to the Masses and how it's become the entity that you all know and love today. It's a long, long way from where it was at the beginning, when it was a humble blog that was started as a side hobby almost. So yeah, we're going to go through that story. We're going to tell you it. You can enjoy the story. Like I say, we're going to cover bits and pieces along the way. And if any of you have any questions, then feel free to ask us in the Money to the Masses group. But we're going to even cover how I know Andy, which was one of the most popular questions we get asked when we do our meetups. So how did Andy and I meet?
Good. So I'm excited about this. I mean, I know the story. I've known you for many years, but there'll be 99% of our listeners who don't. And I think it's a really interesting one. So where did Money to the Masses start? What was the seed? What happened?
The seed was the birth of my first daughter. So my daughter was born just over 10 years ago, and I was on paternity leave from a job that I had in the city. Now, to jump back a little bit, my background is I'm a maths graduate, and so I graduated from university. I then got a job as a trainee actuary, which is a job that makes accountancy look really interesting. And I moved down to the South Coast, did that for a period of time, and then I ended up moving to London with my brother Justin, who actually is one of the other directors of Money to the Masses. Because one thing you're going to learn that most people probably don't realise is I don't own Money to the Masses in its entirety. And there's a deliberate reason for that, which I'll come on to. But Justin, who's my twin, I ended up going to live in London.
I'm not Justin. We don't look alike.
No, you don't.
Because people on the podcast might think that maybe we're related in some way, but we're not.
But we'll come to how Andy and I met, because we actually met through work. But Justin and I ended up going to live with Justin, and I was in my early 20s, and I did things seemed quite easy. I left university, I got a job as a trainee actuary. It, at the time, was a well-paid job. I thought that was how life worked. I then realised that the job was in an industry that was slowly dying. It was in the pensions review. I won't dwell on that, but it was to do with mis-selling of pensions. I was the guy who worked out how much money people were owed. Think PPI, mis-selling, and the money that people are being paid out. I was doing that for pensions mis-selling. The pensions mis-selling happened sort of in the 80s and 90s. So I was the guy who was working out the money that consumers were getting paid back by the company I worked for.
So did you think at that point when you got that job offer, I've made it, all these years of uni were worth it, kind of thing? Or, I mean, I know it doesn't quite work.
I know what you mean. I remember thinking when I left university, where's this fabled job that I'm supposed to get? And it took me a while to get a job. And then I started doing that. And it was, if you think about the Millennium Bug, that was kind of how this pension review exercise occurred. That they were under extreme pressure to meet deadlines and pay out money in a very short space of time. So what they did is they employed lots of young people who were largely maths graduates to work out the amount of money consumers were owed. But of course, they therefore paid you very well. Anyway, cut the long story short, I was in the world where I thought that money was fairly easy to come by at that point. And so I decided, I'd had enough of it and just quit my job and went to London to go live with my brother with no means of really paying the rent. So I ended up living there for a period of time, which I then met my now wife, which was quite fortunate because I didn't have a job. So she probably met me at my lowest ebb. At the time, I thought it was brilliant.
It was only up from there.
It was only up. And then I ended up falling into financial services.
Oh, I thought you were going to say I ended up falling in love.
Let's just say I did in case she listens. And I ended up falling into financial services, which is where I met Andy. And I basically took any job that came my way in financial services. So I ended up working in what started off as life insurance brokerage, then moved on and started doing financial advice, a financial advice firm.
Do you do that? That's like you saying that. I end up meeting Andy. I end up taking any old job. So no offence taken.
So that's a quick whistle stop of how I got to where I was. So I'll come back to Andy in a minute, but I ended up working in the city in the end and doing all the qualifications it felt like under the sun, being extremely well qualified to go and talk to very rich clients about their money. And I had all the qualifications and more than most financial advisors had: mortgage advice exams, compliance exams, the investment management exam. So I had more letters after my name than in it. And what happened is I started to become disillusioned with the world. Really, it was because I when I become a dad, you suddenly, sometimes for some people, for me it was, I then decided, what were I doing in my life? What am I doing? And I realised that although I quite enjoyed the technical side of it, where was the future? I didn't really want to go and be a financial advisor on my own right to get clients, because it is basically kind of sales. It is, whichever way you look at it. It certainly was in those days. So I met Justin in a coffee shop in basically Leadenhall Market, which is a part of the City of London. So if you imagine the city, if you don't know London, it's where all the big offices are, and the Gherkin, it's just in the shadow of the Gherkin actually. And I met him for lunch and we had a coffee, deciding what I was going to do with my career, what I was going to go do something different. And this was before the money advice service or anything like that existed. There was nothing really online for people in terms of decent money information and guidance. So as a result of that conversation, I started to write Money to the Masses. I came up with the idea after that conversation that we had. Justin does not work in finance, never did. He worked in publishing, but when I say publishing, he worked for his sins. He used to work in the sort of Murdoch empire, but doing a lot of their online strategy. So he knew a lot about how to build things online. So that was a kind of a useful skill for what we were trying to do. And I decided to write a blog anyway, and no one read it, and I used to write it every night. It became an itch I couldn't stop scratching. When my daughter would be in bed, not sleeping, I'd be basically up writing Money to the Masses as a blog, just doing posts about the information I was teaching people through my day job. And a lot of those posts still exist on the website. That's the funny thing. 10 years on, they still exist, and it goes to the core of what Money to the Masses is. We write evergreen content. We always try to write something that's going to have people coming back for. So the first post I wrote about was to do with how you could cut the amount of tax you pay on your savings interest. And that was really relevant to rich people, but actually everybody at that point. Another one was about cutting tax on your income. And so you can go and find those. They still exist on Money to the Masses website. So that was the beginnings of the journey. And it was something that was born not as a deliberate, I've come up with an idea of what I want to do. It was something where it was born out of something wanting to help people do something different, to fill a gap but also it was a slight frustration about where I kind of was at that point in time. So Money to the Masses was registered. It was a blog. It grew from there. People slowly started reading it. And then if you fast forward 4 years, I was still working a normal job, a daytime job, in the city. And then 4 years down the line, I then went on it full time. And that was something that happened probably a little bit later, and looking back now, than it perhaps could have done. But the funny thing was, in the early days I did Money to the Masses, I did it anonymously. I didn't tell people who I was and what I was doing. And part of that, I've met people who are doing similar things, maybe in different spheres or different industries. When they write content, is they become either embarrassed by it, worried about what their employer's going to say, or they are worried about failing, which is one of the core things of nearly everybody who does something. One of the lessons I've learned is not to fear failure. Actually, that holds you back. And so that was the early days. It was anonymous. And I can't remember offhand how long it took me before I stopped writing it anonymously and it became Damien Fay. But it was probably, I would say, a good year or so before I did it with my own name on it at the time, because building something that was separate to what I did as a day job, you have to realise the finance world are very, very protective of anything that they don't understand, of their own businesses, but they also fear anything they don't understand. So they don't like the idea that you might just be helping people, because they sit there and think, well, how can they make money out of it? And that was sort of set up the stage for a lot of the conversations I had over the years, where people just wonder, how do you make money out of these things? Which actually was never the point. Money to the Masses, we didn't even make or try to make money out of Money to the Masses until I went on it as a business full time after about 4 years. So
is that a question you still get now? And is it a frustrating question to have to answer?
Yeah, I mean, the most popular question I probably do get now from people who are not consumers, so people who listen to us or read our stuff, I mean, they will just focus on, well, how do you make money? How do you, which is a bit odd, because it's like going up to somebody you don't know and just saying, well, ask them how much they earn. Or the focus was always on how you monetize things. And what we do is a lot of print online. So it's not print online, but you know, it's journalism in a way online. It's combining the worlds of technically understanding what you do, expertise, with the idea of journalism. That's kind of, we sit in the middle. That is difficult for some people to be able to try and turn that into a business. And so we successfully did it over time, but it was never the key. No. What happened was, in the end, that we were able to make money from what we do, to be able to keep a roof over our kids' heads and have a business that helped people, more and more people, was because we earned the right to do it. So people wanted us to, if that makes sense. We didn't try to from the beginning. I think it would have failed. We would have failed if we'd have gone out there and tried to make money from the start. But we weren't in a position to anyway. It was something that was like you writing a blog, writing a diary almost, and then over time it goes from being anonymous to being influential, and that's a very long process.
And I think what helps with Money to the Masses is we look for opportunities. Now, those opportunities is where there's missing information, and we can provide that link to the people who are looking for that information. It's never driven by what makes money. Let's go and do that, and how can we deliver that to the people? We definitely do it in a different way to a lot of other people.
Yeah, and we don't do it in a sensationalist way. We're just trying to solve problems.
So as we brought that up, talking about making money, and people often ask it, and it's a difficult one to answer. It's not really that difficult. I mean, how do Money to the Masses make money? I mean, explain it.
It's a very similar model it's the same model as what Martin Lewis does with Money Saving Expert. So there are a number of ways we do make money. Some of them may be, for example, affiliates. So if we have a partnership with somebody and you maybe use their service or get referred or buy a certain product, then we may earn a small amount of income. And that therefore helps keep the lights on and keeps the whole service free for most people. Now, to make people understand, 99% of the people who engage with us, read us, whatever, don't actually pay anything. We don't make money from any of them. We don't try to. So 99% of the people who come to our website, we don't try and make money from. And it's almost like there's a Venn diagram where there's a great piece of content that we writing about something we like, and it happens to coincide with something that is very good in terms of like maybe a service, product, and there is a means to be able to monetize that, then that is almost a perfect combination, that middle of that Venn diagram, but it doesn't occur that often. So it doesn't dictate editorial or anything. So I'm in charge of editorial. I write editorial stuff. Andy's the deputy to all that. We have freelancers. We have people within the company who write. But what we write about is only dictated by what people want to read about and answering questions. So it's still the same as it's always been. It's never driven by commercials. In fact, I don't have any dealings with commercials. None of the editorial team do. Justin deals with all that. So it's like a Chinese wall. We don't discuss the two. They don't cross over. And that way we've been able to keep that integrity and honesty about what we do. And the amount of times we say no to so many things, I don't think people realise. They listen to Money to the Masses and they don't realise that anonymous journey to having influence. We are now at a position where we get lots and lots of companies who come to us who want us to do things with them, partner with them, and we say no to most of them because they don't meet our standards, or they think that there may be other people out there who may have some editorial control of something. Maybe it's a newspaper, who knows, or something like that, who are happy to let commercials influence what they do. We don't. So, in short, that's one of the ways we make money. Sponsorship. You probably heard an advert maybe on this podcast. It's one of the only ways we allow people to sponsor or advertise with Money to the Masses. We don't have adverts on the site. We never have done.
I think that's key, isn't it? Mention that more, because very, very few sites these days have zero advertising on that page. And you always had a clear vision of having that as a clear space where people could focus on the content.
Yeah, and it's because they always want banner ads and things like that. And it becomes stack them high, sell them cheap. That's what happens with advertising. And you end up going to the highest bidder. And I think it's a dangerous world to get into. So if you don't know about the people, you have to know about the people you're partnering with in depth to know that you're not doing something, or you need to know about the services or products, because there is a danger, as we've just seen in a newspaper story about some of the advertising that goes on in the Tube network. So if you go on the London Underground about investment stuff, it's almost like feels like there's almost like a Wild West going on. It's falling between the cracks of regulation and advertising standards, that people are able to put things on adverts that are, let's just say, a little bit confusing. So you don't want to get into that realm.
Okay, so we've been through the history of when Money to the Masses started. We've also looked at how Money to the Masses makes money, and we touched on it earlier. Where did we meet? Where was our meeting point?
Our meeting point was a job that, when I said that I moved to London, I was basically fell into financial services. I met Andy at that job, didn't we? That's where we met. And on the first day I went to that job, Andy was, when you're like the new guy and they feel sorry for you and they feel like you can't actually go and forage for yourself and go and buy your own lunch. Someone has to take you to lunch and they never do it again. It's just to sell you this dream that we all get on. That's how it always works. Every job I've ever been to. Very nice thing to do. I mean, every company does it. Andy was the guy who had to put up with me for an hour and take me to lunch, and then that's how we got to know each other. So we end up being like basically work colleagues for a number of years, and then I moved on from there, didn't I? But me and Andy stayed in touch, and over the years that Andy was doing his thing and I was doing mine, and then we worked out today actually that there was a nice, I don't know if symmetry is the word or coincidence, of the 10-year celebration, because about the time me and Andy, we almost had a love of, we laughed about it earlier, we probably had a love of we were quite young at that point, in our, 20s, early 20s?
Quite early 20s, I think we're 23, 24, something like that.
So we're now like in our 40s, and it was our love of basically drinking, enjoying life, and
working hard but playing even harder, I think.
Yeah, and so we had that sort of common bond, and it was funny because we talk about Money to the Masses as 10 years old, and that was like a turning point for me. But Andy had his own about the same time. Almost, I didn't know at that point because I'd left where I worked and I only saw Andy sort of every sort of so
every
many
few months. Yeah.
So Andy's turning point was the 10-year anniversary of...
Yeah, for me, just basically giving up booze. It was a sliding doors moment. I think I may have talked about it on the podcast before. I'm teetotal now. So those early days of Damien and I meeting up and drinking quite heavily, it kind of caught up with me in a while, and I got into a bad sort of situation where I was drinking habitually every day, only a few drinks. I wasn't ever one of these guys who woke up shivering and needed a drink in the morning. I just probably drank a bit too too much and probably pushed the limits. And that all changed when I had a baby. And I just had one of those moments where I woke up one day and just thought, do you know what? This is probably best I didn't. And it was literally within a week of you having the epiphany.
Yeah, but what's brilliant though is that we were talking about it, and Andy sort of, we spoke about this, which I think is to be applauded upon, that you made 10 years, and I think that's fantastic. It's probably the best thing you've ever done. And it's just coincidence that we both did it at the same time, and almost both of these anniversaries passed us by without us realising. So that's why me and Andy, we stayed friends, and then over the years, we kept in contact, meet up, and then probably 5 years ago when the podcast started, that's when I got Andy involved in starting to edit the podcast, being on the show, and then the rest of the story of the podcast. So now we've done 250 plus episodes. So it's been a brilliant journey. Of course, now Andy works at Money to the Masses with me, along with the others parts of the team, which we couldn't do it without them. So that's been brilliant, that whole journey of going from something that was a blog, an idea. I mean, trust me, there have been times when I was doing it that I almost quit? I think there was times where there was almost pressure on me to do it because there were certainly pressures from people within my career that didn't want me to do it. There were pressures from people who it doesn't really fit with having a family if you're going to be up all night writing.
Ironic that's where it all started as well. Probably at one of the most stressful times as a new parent.
Yeah. Trying
to hold down a job and the family, and then you took on this extra thing.
Yeah, and so the one thing I want everybody to take away from this podcast, if it's nothing else, you listen to this story. There was a point where I had that coffee with Justin, which is why I went back to that coffee shop this week, the same coffee shop in Leadenhall. And in fact, there's another sort of fact. Money to the Masses isn't a company name. That is a brand. The company name, because you can't own, well, you certainly couldn't at the time that we registered it as a company, you can't own a company with the word money in it without it being regulated. So we had to come up with something else. And the company name, the company that owns Money to the Masses, that obviously I'm one of the directors of, is got Leadenhall in the name. And Leadenhall was sort of paying homage to where that coffee shop, which I went back to this week. You'll see a video on Instagram. I went and had a coffee, worked in there for half an hour for this sort of nostalgia trip down memory lane. Because it's good to see where you came from in the story, because I think you have to sometimes look back. One of the things I want people to take away though is that when I had that coffee with Justin and then left there, the easiest thing to have done, which I probably would have done 99.9% of the times, would have had this idea and then just not taken any action. The fact that I took one bit of action, which was to go back home and then that night register a domain name that I came up with, the name Money to the Masses, sort of come up with the idea and then start to write. That was, if I hadn't have done that, none of this would exist, and that is what everybody would generally do, including me. But that one sliding door moment, we always said it already in this podcast, but like a sliding door moment where I decided that I wanted to try and help a lot of people do things with their money. I wanted to make a change. I wanted to put information out there, this sort of altruistic ideal that I had. But I then started to put the wheels in motion and just doing that one post and then doing the next one the next day and then the one after that. And eventually it became this itch, like I said, I kept scratching. But the message is consistency. If you are consistent in terms of the output, in terms of content, whether it's this podcast, piece of writing, and the quality, you will have a much better chance of succeeding than anybody else. And I always liken it to I hate EastEnders. So while millions of people were watching EastEnders, I'm sitting there writing a blog that nobody might have read at that point. And if I keep doing that, I'm already in the top 1% of people in the country in terms of people doing something at that point of time that could go on to be something that's much bigger than themselves. And so you're better off giving yourself a chance. It's like having a second job. Money to the Masses was a second job effectively that didn't pay. But in time it has become obviously my sole job, and then we do events, etc. So it's got to have that why. What you do. Money to the Masses had a why I wanted to make a difference. It had that consistency, and because of that, over time, we were able to build trust. And that building trust is the key thing, because in the financial services system still now, in the money world, there's a lack of trust because, understandably, we've had the financial crisis. Things haven't really changed a hell of a lot. We'll come on to that, the 10 years since I started to now, what the differences are in the money world. But there are some positive changes, but there is still an element or lack of trust in financial brands generally. So I suppose to sum up, I want people out there, if you've got something you want to do or you're thinking of doing, whether it's business or whatever, always do it for the right reasons. And don't just do it for the money. You'll always come back to that. If you have your why you're doing something, then you'll have a greater chance of probably succeeding. But it gives you a focus. It stops you losing your way. So always have that why. Do things for the right reasons, and like I say, don't just do it for the money.
So we've looked at how Money to the Masses started, what it's all about. It's 10 years. It's a long time. It's a long time to experience the world of money and learning as you go. Is there anything that you would have done differently in those 10?
Yeah, I think I would have done it quicker. I think I would have tried to. See, when I tell the story that I quit my job, and I remember sending the newsletter out to people at the time saying I quit, and it was one of the most open newsletters we ever did because people thought I was quitting Money to the Masses rather than my job. And there was this whole wall of people saying, oh, that's amazing, I can't believe you're doing that, how can we help? Which made me feel it definitely the right thing to have done. And people say, Cole, you must take so many risks, you're a risk taker, I couldn't have done that. And looking back on it, it does feel like jumping off the cliff a bit. And I did the podcast series, One Giant Leap, where I went to try and find other people who were taking that exact leap of faith off the cliff. But the one thing I would say is not to belittle what I did, is that I'm naturally quite a risk-averse person. So I jumped off the cliff with the bungee rope and the parachute on and probably a crash mat down below. I'd managed to try and save up money to enable me to have a year to try and make it work.
You gave yourself almost like a deadline, didn't you?
Yeah, it was like saving a year to try and make it work as a business or move on. It got to the point it was taking over so much of my life that I had to do something about it. It was kind of sink or swim.
Yeah, but don't do this, you might regret it, so just do it.
But one thing I'm guilty of completely forgetting on the story of this that's important is that another thing I would say to people is you can't do it alone. You can't do this on your own. You can't build something probably successfully and grow it to a bigger scale if you don't have other people with you. So I mentioned earlier that I don't own Money to the Masses 100%. I don't, in fact. I own it jointly with Justin and interestingly my dad. And the reason why that occurred is because in the early days when Money to the Masses wasn't worth anything, because it was just this entity this blog that was sort of slowly growing. It hadn't become the website and everything else that it is today. To get them fully on board with what I was doing, I needed people who had different skills to me. So I mentioned Justin's skill set was very different to mine. It was much more technical. He built the original website. My dad at the time had very much, was retired, but a business focus and knew a lot about managing businesses, etc. So you got people who had different skill sets, and fortunately the three of us did. But in order to get everybody focused and pulling in the same direction, they have to have something that's worth like skin in the game almost, even if it's not worth anything.
And was that always a deliberate decision? Did you always know that in order to progress you wanted that to be the case, or were you convinced that was the way to go? Was that a deliberate decision, a deliberate choice?
Yeah, I mean, Justin was always around there at the early days anyway, but it got to the point where I know what I'm good at, but I do definitely know what I'm not good at. And so it's acknowledgement of that was the difference that made me think that, yeah, well, I need help to progress.
You didn't feel like you were ever giving anything up. You only had stuff to gain, right?
Yeah, I mean, it's easy to give up something that's not really worth anything. You've got to think that you can write whatever you want all day long. But there's also the next step. You've got to have the loudspeaker. So if you Speaker's Corner they used to have in Hyde Park, if you don't have a speaker megaphone, no one's going to hear you. No one's going to listen, despite what you've got to say may be the best thing in the world, and the world should be listening. So what Justin and the others did was enable me to build the megaphone. And so that is why the way that it's structured as it is. And that's a huge part of why it's been successful, is because you can't do it all on your own. You're too busy trying to write content and all that. You can't juggle all the balls. So at some point, you do have to get other people on board. You do have to get other people to help you. So I would urge people doing this, you've got to find the right people who you can trust. And coincidentally for me, it happened to be family. But if you have friends, etc., then that's all good as well. But yeah, so the 10 years has been a long journey. It's a journey for me going from, like I say, anonymous to probably imposter syndrome was a big thing for many years. People might find this odd, but it probably was only in the last 2 or 3 years that really left a lot of that behind.
That you became comfortable in saying, yes, this is me and this is...
Yeah.
Because your face certainly became more prevalent on the site in the last couple of years.
Yeah, and people will see this in the next probably month or two when the new site launches. But it seems people might think it's odd, but when you do what we do at Money to the Masses, you have to realise that the finance world doesn't necessarily like what you do. So I came from a finance background, and you almost have a cult-like brainwashing that goes on about what you can and can't do, what you should and shouldn't do. And a lot of that is down to people protecting their own profits. So they will sit there and make decisions based on what's best for them as a company rather than what's best for the client or the consumer. So I'll give you an example. You go and find me a financial advisor who has helped thousands of people for no gain at all. You probably won't find them, there aren't many. Pete Matthew, but Pete is one of the people I'd like to mention on this journey, because Pete is one of the people who, over on Meaningful Money podcast, I met probably about halfway through this journey, a bit earlier than that probably. And he is somebody I've got a lot of time for, because he is doing a similar thing as what we do, but he's doing it he's still in the financial services industry as a regulated advisor, but he doesn't care about giving away knowledge and expertise. The way the system works is that it always has been that you have to pay people to gain that knowledge. And that's still to this day is how most financial advisors work and the finance industry. Whereas what we do is give it away and don't expect anything in return. And Pete does that, but that's why he gets people who want to be his clients. And that's his problem. He's probably not got enough time to have all those clients.
And again, that comes back to doing things for the right reasons.
Oh, yeah.
And so Pete is an absolute great example of it.
I remember Pete's early videos in the early days before I met him, and I really liked them. But I know you would have got people thinking, why is he doing that? But he wasn't doing it for trying to gain anything. Pete can tell you his story himself. Maybe I should interview Pete about his story, actually. Anyway, that's just off on a tangent.
And for any that haven't seen Pete's videos, they're normally him in a field by the side of a road, top of a mountain.
And so that's why we became friends through this journey. Even though, I mean, I still get people, you might find it odd listen to this, but people in the financial services quite happily try and cause problems even to this day, because they don't like the idea that we are empowering consumers and highlighting things that they don't want us to necessarily highlight, which is very strange, because you sit there and think, surely having a far better educated population is a good thing, but it's only a bad thing if you have something to lose. So there's been lots of improvements in those areas. A lot of people doing things probably for the more better reasons than just profit, but we still are in the world. If you get paid purely based on what you sell, then, I mean, we're getting better, but in those worlds, in the financial services world, you're still going to get some conflicts of interest, especially when their fees, etc., are always based upon percentage of how much money you have.
So touching on that now, we're kind of getting into the crux of what frustrates you now about the world of finance. So what has improved in the last 10 years? What's kind of been the landmark sort of successes, if you like, and what hasn't improved, and where do you expect it to go?
Right. The thing I think is a big improvement is technology. Like, technology has revolutionized the finance world from when I started this 10 years ago. So to be able to do half the stuff we do, and the use of technology has been amazing. If you think about it, there has never been a time that's better from a consumer's perspective to be able to engage with your finances than now. There are apps out there that can automatically work out your spending and budgeting and look at what you're spending money on. That never existed a few years ago. You'd have to do it all manually. There are robo-advice firms. There are low-cost investing options out there. And investing has become accessible. And the reason this springs to mind is that the early days when I was writing on Money to the Masses, I always remember saying that if you want to invest, then you need to have at least 50 grand. That was the default. You could, coming from a financial advice background.
And how long ago are we talking now?
This is in the last 10 years.
Wow.
But now it's not. You can invest from £1. It just wasn't available to everybody. And so now it has been opened up, and we've had... Do
you think that's an influence from the US? Because they're more sort of investing minded over there.
Yes, it is. And I think, but it's also a response to the RDR, so the Retail Distribution Review, which effectively started to change the way that advisors could be disclosing their remuneration, and also change the way they could be paid. So in that period, what effectively happened is, over a number of years, we went from a period where advisors didn't have to disclose, then they did have to disclose how much they were earning from, say, an investment. Then they had to, going forward, as time moved on, they were having to explicitly state the fee and where it's coming from. So that what happened, you just got transparency before, through RDR, and afterwards. So investors become now more aware of the charges, and because they're more aware of the charges and what they're paying for, they started to question what they're paying, and that opened up the market for low cost propositions to come in. And passive investments, that wasn't really a thing 10 years ago. Passive investing, likes of Vanguard, have exploded.
And again, so this is the introduction of technology helping to run these.
You don't need a fund manager. You can have a computer do it.
Yeah.
And so that's brought the cost down, and therefore that's opened it up to more people. But that goes back to the point that I was touching upon earlier, how when you come from an environment where things can only be done one way, because you've always been, that's how you've learned it, it's refreshing to step away from that industry. And one of the reasons why it was refreshing when Justin was the other director in the business and major influence is he was trying to solve problems from somebody who doesn't have a finance background. So if you only have a view of in one way, your view of trying to solve something is going to be skewed, or the possibilities, by your past experiences. So for example, you're only going to, if you think that you can only, you're not allowed to do a certain thing because it goes against, I don't know, compliance or what is the done scenario, Justin would be more like, well, why can't we do it a different way? So I'll give you a real life example with the iPhone. No one ever woke up and went, I need an iPhone. But Steve Jobs decided to create an iPhone. Now everyone has an iPhone because he looked at it differently. He came at it from a different way, and the product he made is so different to what was the phones that were before that, because he was trying to solve it and he gave them something that didn't exist. And of course, if you're trying to do what we do, it's beneficial to have people who come from different sectors, different industries, because they'll try and solve it a different way. But then you have to therefore be aware of like the compliance and restrictions. But they innovate, and that is why all the big innovations you see in finance are coming from companies that are outside of that inner circle of the city. They're coming from people who trying to solve a problem and therefore becoming successful. And a lot of the tech startups are doing that, trying to solve problems, and then by doing so, they are therefore being able to grow big businesses. And some of that is the robo-advisors. Some of them are things like online mortgage brokers. So yeah, I think technology is a huge thing, I think.
Do you think some of these innovations have come from the decline of cash and the increase in like chip and pin and card payments?
Yeah, I think that's a big change. Chip and pin technology, the way we are happier to transact without physically handing money over or meeting people, that's changed. I think people are more comfortable with it.
Do you think there's more sort of people are a little bit more trusting on online transactions?
Yeah.
Not?
Yes, and I think the thing you've got to realise, there's a wave of younger people now who are investing who have never been in a bank branch. They don't go and see their bank manager. So there's already comfortable with the idea of just dealing with technology. If they can't do it with technology, that's almost a sign of failing from the institution rather than being a positive that you can see a person. So that's very different. The only thing it does do is I do think we're starting to get in a world where we're in danger of the financial illiteracy increasing. Because technology is great, but it means you don't have to understand why.
Hands off, isn't it?
Yeah. And so children don't see you using money. Children don't see you getting change. And so I was playing a game at home the other day with my youngest, and it was a game with pretend money. And she doesn't see us use it. And so that's a failing of ours, but that's just the change. But we're going to keep going down that road. I'm a Tottenham fan. I go to the Tottenham Hotspur Stadium and you can't pay by cash anywhere. It's all contactless. So if a business of that size is just getting rid of money, that's where we're going to end up. So I think we're getting in a world where financial literacy is questionable whether it's going to improve. So things like money to the masses and other entities their importance is only going to probably grow. So
those are the things that have improved. Where do you think it's become a bit stagnant? What's not got any better? And what could improve?
I think equality. I think equality in terms of, it's not just pay for women, but I think it's the representation of women in finance. I'm not just talking about on boards, that's important, but I just think generally within senior positions within firms, a number of times I've been to see, because what you don't realise is that if you think of all these tech firms out there and big brand names, in finance, I will have been into those firms. If I write a review about something, I will have probably been in there. You'd probably be hard pushed to pick a very large name in the finance industry in terms of, particularly in the investment world, where I've not gone in and grilled them about something. And the number of times I go in there and the people who I talk to are not women. They're almost always men. And it's even in the robo-advice space. And it's refreshing when you do see somebody who is a woman who's founded a company, but it's unusual. And also we're still in the world where people I don't want to sit there and have a pop at people are, like the word privilege, because it's got a real range, because people are more privileged than other people. It doesn't just mean somebody's gone to private school or been at Eton and stuff like that, but there is still a skew to that end of the people who are the
There's more
influential people.
there, isn't there?
Well, even in the new tech startups, there's still that skew there. There's not enough women. So I think that is a problem. I think the inequality in the world.
How do we change that?
I think you're going to have to start employing more women, encouraging girls at school to get involved in finance and tech, because the big thing is we're building tomorrow's world, but it's still being built predominantly by men, and I think that is slowly changing. I think we need to give women a greater role in. We did a podcast, didn't we, about economics and women and about how they're undervalued. That just needs to be a change of mindset in society. So I don't think it's just a finance problem. I think that's a wider problem. And on that, actually, VC funding, so venture capitalist funding, there's evidence that shows it overwhelmingly favours men. So if you're a man and a woman going to go and try and secure funding, the man is much more likely to secure it than the woman. And there'll be lots of questions asked about her sort of lifestyle and everything like that in terms of having children and things. So there is a much greater chance it favours men, and it also favours sort of basically white privileged men. And so what you're doing is, in a way, it's just unfortunately sort of a vicious circle where you're just perpetuating the same thing. It's like when we look at the Oscars and the BAFTAs and all these conversations we have, unless people of a different background are invited in, then you're going to keep getting, but different background, different gender, whatever it is, you're going to keep getting the same outcome at the end. And Money to the Masses was kind of a part of that, because one of the things I talk about is that I suppose it was an inferiority, not complex, but the idea that I didn't fit in with everybody in the city because I wasn't one of those sort of white privileged posh people. When you're operating,
you're proud of your council roots, aren't you?
Yeah, I mean, it doesn't make any difference to me, but for some people it does. When you're talking to people who are wealthy,
but some people hide it though. Some people are almost embarrassed by it, and I don't think you should be.
No, I don't think. It's just what I realised is that, which is part of this self-discovery part, is your biggest strength is who you are.
Absolutely.
And so therefore, if you're like the masses, which is kind of what Money to the Masses is, one of the things that people say about when they listen to the podcast and anything like that is that we're normal people talking about a maybe complex topic, and that is a positive. Now, on the flip side, those people who may be from a certain background that's very different to mine, but typical of the people operate in the higher echelons of finance, they couldn't do what we do. And that's why I think you have to concentrate on what you're good at and what makes you you, because that's how we get money to the masses.
So is there anything else in the world of finance that could do with a bit of a rocket, so, you know?
Yeah, I think there are. There's probably a whole load of them. I could go on all day. But one of the things is people know that I don't obsess about property. Now, I own a property. I live in it. But there is this obsession in this country still of owning property. And that harks back probably from centuries about land ownership and stuff like that. But it's become a real divisive topic. And we're getting to the point where we've got this baby boomer versus millennial. And that divide is getting wider. And at the core of it is often property ownership. And we hear it, like, even when we're talking in the office, the sort of different generations that you sort of their views on things. It comes down to that, and I worry that we're getting a bigger divide between generations than we had 10 years ago. I think that's worse, and so we've got to try and look at ways to try and encourage that to be improved. And one possible way, we've got an obsession with trying to teach young people about finance. I love it. I get it. It hasn't really taken off in schools. It hasn't become a core part of the curriculum. But at the same time, I do think that we just need to try and educate everybody, because what we're doing is we're allowing people to, what normally happens is that if you have a problem, you may ask a parent or grandparent for their advice. So the world and the advice that they used to follow or they lived in It's moved on. And as I said, 10 years ago, it's very different to now. A
good example of that is when I get asked to help with the homework and I try and help out with the maths and I'm carrying one and I'm being told, no, that's not the way it works. It's an example.
I know exactly what you mean.
Because apparently that's the way of doing it.
Yeah, so I have to get my daughter to show me the way she does it so I can understand it and show her back. And you think, well, what was the point? Because she clearly understands it. But it's a perfect example. So what we're getting is the old myths and the old issues and problems are being reinforced because it's just the way knowledge is passed on. So we need to continue to educate older people. We need to continue to help them to understand how the world's moved on, use technology to improve their situation, because they have a concentration of wealth. So therefore they have a concentration of maybe exploitation, maybe by certain parts of the financial services, but more importantly, exploitation by fraudsters. But they probably have less education and they're more vulnerable. Whereas younger people, their vulnerability is their desire to grow wealth. So you'll see Tesla shares have gone through the roof this week, or Bitcoin. Millennials, I don't like using those terms, but younger people were more likely to try and gamble on those, speculate, because they're trying to get rich quick, to try and buy a house. And I think we need education across the board to try and combat that divide, and perhaps to try and, breach some of the inequality. Don't forget, I think there's going to be a big change in the next 10 years. The baby boomers will all start to die. I'm sorry if you're a baby boomer, but this is just life. And I think the sort of millennials, children, are going to inherit a wave of money, and some of the millennials, because it will skip a generation, which would be yours and my generation, because we will hopefully have got to the point where we're sufficiently okay that it more likely to be passed on to our children. So I think there's going to be a baby boomer generation that's going to leapfrog to the next one. So we do need to make sure that the younger people are being taught a lot about money. Otherwise, we're going to have a whole new world of problems, I think.
So we talked about there the what's been good, what's been not so good, the last 10 years. So the next 10 years then, we touched on it a bit there. What would you like to see? What's going to be the next big thing that blows up? Or
I think technology again improving. I think regulation improving quickly and being more flexible. Regulation at the moment is very hands off in a way that when you do something wrong, I use the analogy of being like you're in a school playground and the dinner ladies are standing around the outside, and they only get involved when somebody does something bad or annoys them, or someone points out to them that little Johnny's done XYZ, so people snitching on each other. That's kind of how it works.
It's a very reactive.
Yeah, there's no one imposing rules, or there's certainly nothing going on that's proactive. We're saying, well, you can't do that, but you could do this. And I think that stifles innovation. I think we need to have a regulator that's much more progressive in that regard. That will probably improve. I think what we'll see in the next 10 years is a lot more consolidation. I think we're going to get a wave of all this technology. And I think the danger is we've got a lot of technology building, or people building technology to be bought by the existing institutions. I think banks will start snuffling up a lot of this tech. And so you wonder, are people building stuff that's useful and consumers want, or just something that's saleable?
Could you see banks, for example, just buying up, comparison sites, so they can just build their APIs into...
Yeah, I think comparison sites are slowly having their day, because the way it's being done now is that you may have a Starling, so or things like that, they have a way of comparing maybe utility bills for you within that app. That is where it's going, and I think it's going to get to the point where things like that optimize your money. And I think comparison sites know that. So it's very different, less input in from the consumer. But then that opens up the whole world of, are they therefore getting the best deal? Because if it's being controlled by an entity, then I think technology is going to be exciting. I think hopefully we're going to get a bit more equality in everything we do. So I think it's the only way is up, I think, for money. And hopefully we'll inspire somebody else to create the next Money to the Masses, who are going to go out there and talk more about money and do all these things without necessarily having to be paid.
Well, we talked about the industry over the next 10 years there. So where does Money to the Masses stand in the next 10 years? Where would you like Money to the Masses to be in 10 years?
I think Money to the Masses, if you speak to Justin, he's into the whole tech side of things. And I think there's a lot of good opportunities for us with open banking. Certainly the MOT. I mean, the MOT was one of the things I'm most proud of. 80/20 Investor is another one, giving away, basically teaching people how to run money. No one's done that before. So we try and do things no one's done. So for us, it will be trying to maybe innovate products. So there are a lot of products in the way things have worked conventionally, maybe credit cards. I mean, I know why the people who are financially struggling get the worst rates, but it almost feels like a vicious circle. It's like, if you're struggling with money, you get penalised.
Yeah.
And I think that needs to be reviewed. I think that needs to be changed. And so I think I would like the idea that we'll be involved in maybe some product development with entities out there to build things that are far better. And I think voice recognition is going to be a big thing. I think in technology, I think voice search will be, you'll be able to ask Alexa, what's the best way to do something? And then you'll hear something read out, maybe even my voice. I mean, you can do it now, actually. If you ask Alexa certain things right now about money, it will read out our content. And, well, another one actually on that is we'll demonstrate it, in fact, because it already exists. You might not know this, but if you do it on Google, Andy has Android. You've got an Android phone, haven't you?
That's it, yeah.
So you do it just to show people how this is already working.
Hey Google, which are the best budgeting apps in the UK?
Here's a summary from Money to the Masses. The best budgeting apps in the UK. How to budget without trying. Yolt, great for tracking spending across multiple accounts. Money Dashboard, great for helping you budget for future goals. Tandem, great for simplicity.
So there we go.
There we go. She'll whittle on, but we're already thinking about that next wave, and lots of people aren't. We're already down that road where, who knows, you may even get My Voice doing it at some point. You may even get what they called it, Amazon Skills or something like that with My Voice. So this is the future. And the other one I want to quickly touch on, because I'm conscious of the time, is artificial intelligence. Now, artificial intelligence will become integral in finance because it will allow a lot of data analysis, like big data. So they could go and look at all the people out there, and they could tell you things and products that you will need or might be useful for you based on other people like you, and you might not even know it. So it will solve that kind of serendipity thing about things you didn't know about. But the downside to that is that data can mean that you again get some more inequality, that it gets exaggerated. So risk pooling. So that's where life insurance companies may, for example, be able to offer slightly lower premiums to some people who would be uninsurable and actually cover them, because there's a whole pool of people out there who are lower risk that are part of this big pool. That means that they can offset some of the claims that are going to go through. Well, if it's done on an individual basis, which artificial intelligence could do, then that is a worry, because you could get people who therefore become excluded from certain parts of the financial ecosystem or don't get insured. And of course, there's that whole thing about personal data and health data, etc. So I'm hopeful for the future. I think there's a lot that's going to happen for sort of Money to the Masses. We're going to try and encompass all of that. If we have daily conversations about this stuff, AI, how we're going to embed it into what we
kind of
do.
almost get lost in it because there's so much opportunity there, isn't there? And sometimes we come up with these ideas and get excited by it almost. There's so much
and don't think because you read and listen to us, this isn't going on. I mean, we're on the far edges of this stuff innovating already in the background, in what you do and how you interact with what we do. You just don't see it because you just see the finished product. So we are pushing those boundaries. So it's kind of a watch this space. But I just want to finish this by thanking everybody who listens to this podcast, who's read newsletters, followed us on social media, part of our Facebook group, 80/20 Investor, whatever the means that you've followed us, whether it's on the website. Thank you for all your support over the years, because we couldn't have done it without you. And here's to the next 10 years.
Brilliant stuff. I can't really add anything more to that. So if you want to get in touch with Damien, you can do so. It's Damien@moneytothemasses.com. Twitter, it's @moneytothemasses with number 2. Like Damien said, we've got all the YouTube stuff you can consume. If you're not already either a Facebook follower to the Money to the Masses page or a community member, what are you doing?
What are you doing?
Get involved. Get involved. That's it. We're kind of done, aren't we?
We are done for this week. So next week we'll be back as normal with a normal show after our celebratory decade show, but we couldn't let it pass without acknowledging
And
it.
if you did enjoy this week, do feed back to us, because it feels a little self-indulgent, but I think it's for the right reasons.
Yeah, it is, because this becomes a seminal piece we can refer back to. So people come and ask us, what's our story? We can say, here it is.
Listen to episode 257.
25, whatever it is, and you can hear how we came about. And I want to inspire people who sit there with an idea on their sofa at night. I want to start writing about knitting. I want to inspire you to say that you can do that, and you could change the world if you wanted.
Knittingtothemasses.com. Get on it. Right. Until next time.
Until next time.